Okay, I wanted to continue where I left off. All right, see this vertical put spread right here? I'm down 11.97% with 4 days to go. I want to roll it, just buy a little bit more time. Okay, so I can do it through here, but let me show you how to do it through Dole, because if this ever happens to you, you might as well learn this now. Okay, so first thing I gotta do is I gotta find that position in my SPY right here. Okay, these are the open ones I have because remember I put in two orders in from toss. So look, let's find the 197. Crap, what was it? I sold the 197 and I bought the 188. So 190, here's the 188 put. See all my groupings all screwed up. So you don't have to stress, just figure it out. So click on this and I gotta find the 197 I sold. That's a put. That's not it, that's a call. So here's the 197 put. Okay. But see how the quantities are different? Don't worry about it. Here's how you change it. Click on roll. One contract, three contracts. I want to change this to one. Double click it. Quantity here, drop it down to one. Click on done. All right. We can roll it. It says a 30-cent debit here. So I think what's happening is I got to do this first thing in the morning because I think Doe is kind of screwing up the pricing. Because why? When I go back to Thinkorswim right here, I click on this blue dot right here, and if I click rolling order, okay, and I'm gonna push it out to the end of the month, right? That see, I can do it for a credit. So I think what's happening is there's a link between Doe and Thinkorswim, and I think after hours it gets kind of hinky. So um, I can buy myself time to here, or I can try roll it out to a different expiration date. See these right here? I can click this little thing, and I can push it out and see what happens. Credit still yet? That's good. See, um, I can even do it to the last. See, I can do it for a credit. So if that's the case, I'm gonna roll it. Okay. I can even try to move it to January, which is, I think this is the normal ones right here. See, January 15th. That'll be a credit. See, so I could roll it up to there, which I'll probably do. So if that's the case, let's do that. I'm going to hit confirm and send. It'll turn into a working order anyway, and let's just see what happens. All right. For a credit, so hit send. Go back to this order is accepted. Blah 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 blah, and then go to monitor right here, and you can see. Well, it should show something. I don't know why it's not. What the hell happened? Whoops. Go back to Thinkorswim. Okay. So you can try to do it that way. Um, what else? Let's go to working orders. I should have three working orders. Did something happen? I think I wasn't able to do it. Let's see what cancel. Yeah, here it is. Here's a cancel order right here. Shoot. Hold on, let me adjust this like this. Rejected. You're buying. Oh man, my buying power. So I gotta wait to free up some stuff. Because of my buying power, I kind of screwed up my margin. So I'm just gonna have to just close it, I think. But that's normally you would roll it, but I think there's a way I can do it because I ran out of buying power because I screwed up on some trades. 1 second. Okay, so I'm just gonna show you real life what you would have to do and stuff like this. I'm not saying you guys would have this problem, but because I screwed up on that stuff, they messed up my buying power stuff. So what I'm going to do is to free up some buying power. First thing that I'm going to do in the morning is I'm going to close out these positions. So I'm going to create closing order. Why? Because there's a profit. So if I can, here, wait, let me double click again. So whoops, let me show you what I'm talking about. All right, see this one here? I have 65% profit already. Okay, so I sold it for 610. I can buy it back for 192, right? So if I close this out, I'll free up buying power. So let's just close it out. It's a profit. Buy it back. It's a limit order. Blah blah blah. Yep. Confirm. Boom. Okay, so do that. Anything else with the profit? Here, the 197 call. I can also close out for a small profit. I can buy it back for like 297. Um, or I could roll this. I don't know if I can roll anything because of my current buying power situation, but I'll know more as soon as the market opens and these close. Or I could close them out. You know what I mean? For small losers or small winners. 189 call. See what the funny thing is? Look, the SPY is at 199, and look at this 189 call right here. See, I'm betting it'll be below 189, and I'm still up. You see what I mean? So this is really cool how this can work. So anyway, I just wanted to walk you folks through that process on what I do. So tomorrow morning, I want these to close, and what I'll do is I'll roll these other ones, okay, or close for profits. Hopefully the market goes down tomorrow more, and I can roll that way. Okay, so I'll be up early doing that. I also wanted to answer a question real quick on the charting. So let me go back to my charts here. And I might have to move this over a little bit so you guys can see a little bit better. There we go. I had a question from one of the new members here. Wait, where is it? Yeah, if I go to messages, the toss chart setup. I think Farmer Dave had a question on if I could explain to me the chart setups in toss. And I'll include the links again on how to share it. So first thing I'm going to do is I'm going to share this chart. All right. So I'll just click on share right here, and I'll put it in this post on the bottom again because I thought I did it again, but you know, whatever. So yes, I'm going to share it. I'm going to create a link, and then I'll just copy and paste this link right here, and then I'll copy it, and then I'll paste it later. Okay, that's how you do it. But anyway, let me explain this really quickly. The top chart, it's real basic, okay? I have the Bollinger Bands, right? And I'll zoom in a little bit so you guys can see. I'll try and zoom in as much as I can so you can see the different setups. This is the SPY. The light blue lines are the Bollinger Bands, okay? The magenta line is the 13-day moving average, and the yellow line is the 21-day moving average. This yellow arrow here is whenever it crosses below the 13, crosses below the 21, you'll see a green arrow. When it's the opposite, when the 13 crosses above the 21. All right. Let's see. And this is the IV rank chart. All these you'll get, okay, when in that link. This chart is real basic. You know, this is really great for if you're like a swing trader or you want to sell puts or sell options or puts or calls in any given market. So for example, when you see this, you could have sold calls, betting that it'll go down. When you see this, you could have sold puts, betting it'll go higher. Okay, but don't forget, you still, if you're gonna sell premium, you still need IV rank to be high. So basically, here you go. This is your IV rank chart. It'll tell you where IV rank is. If it's green, it means it's over 50. If it's red, it means it's below 25, and if it's yellow, it's in between. This is your OBV chart. It's real simple. This basically just stands for on balance volume. More buyers and sellers, it goes up. More sellers and buyers, it goes down. And if it's above its 30-day average, it goes green like this. Now here's a different slow stochastic setting. This is set at 39.1, so it's really different than what most people use, but it's still kind of common. So basically, how I use this is really simple. If I wanna take a bias on direction, you're going for momentum, what I do is I wait for this to be green on balance volume, and I wait for this to be green here, and that's usually a bullish signal, meaning it'll go higher. See, it turned green here on the slow stochastic, but it wasn't green here. So, you know, maybe do nothing. And at basically at this time too, IV rank was below 50. So I could have sold puts here, okay, and I would have made money because green is green. I'm betting it'll go higher, which it did, and also IV rank also went lower from here. Now, when IV rank, the best bet, of course, is when IV rank gets to 100, like here, and then you can sell premium, you can sell golden geckos, you can do, you can sell. You're basically selling volatility. Okay, you're trading volatility, and based on this, you could have said, okay, well, I better be bearish, or you could have been the contrary and say, look, man, it's all the way down here, it's oversold, meaning it should rebound, and you would have been right. All right, so all these charts are in there, and I'll share them with you again on this post. The reason why I'm bearish, I was bearish. Well, not really. I mean, I was doing golden geckos, and it shot up way faster than can I do this real quick? Here, I'll scroll over. Okay, as you can see, the market did this and then came right back, which is kind of weird. I expected it to come back. I just didn't expect it to come back this fast. So what happened was my call size got tested. So I had to roll, further out to be betting it'll go below this, and that's what I'm waiting for. Okay, so I'm guessing it'll continue to drop. It's red here. As you can see, if this gets red here, it'll drop even further. Okay, so as you can see, my positions, I needed to go down. I don't need, and some of my puts are getting tested as well. So we shall see. But that's real quick basic on the charting. Um, the main thing I want you to remember is IV rank though. Okay? Because why? When you can get IV rank above 50 like this is where you can collect the most money when you sell your options. It doesn't matter which way you go. Okay, Tom likes to be contrarian because he likes to start going the opposite way early. That's good and bad. The problem is if you run into these trends where it's been going up and in this example, it's been going up for so long, okay, that once you start betting the other way, you don't know how long it can continue to go in that direction. Here's what I mean. Watch. I'll change this real quick to a 5-year daily chart. So you can see here, for 5 years, this stuff has been going higher and higher and higher, right? So you need these, hold on, you need these pullbacks for you to make money. The problem is if you don't get enough pullback and it just keeps going higher and higher and higher like this and there's no strong pullback, you have to wait a long time before you make any money on the pullback, which is why some people would like to be more trend traders. Okay, you can pick whatever you want, I don't care. But here's a weekly chart. Okay, 5-year weekly chart. You can see when the OBV cross is green, and this is, look at this. See, they turn green here at the same time. That's a huge bullish sign. As you can see, it went like that for what? Since September of 2013. In fact, it's never been, well, for it to get back to this level, you have to wait all the way to September, wow, 2014. This is crazy. I'm sorry. Let's do that again. Green here. This is 9/13. So this is what year? September 13th, 2009. Oh, I'm sorry, 2010, 2011, 2012, 2013, 2014. So in 2009, we got this signal right here, and it didn't get lower. It didn't drop back to that level to 1 year later. Okay, so if you were betting against the trend from here, you have to wait a good long time before you had that pullback. So it can get kind of scary. And look, see where it went red here? Okay, this is to me, this is buying bond. That's the most important. When this goes red, that's a strong sign, especially on a weekly chart. So look where we are here. Okay, on the weekly chart, look where we are. I'll zoom in. See, this thing is really close to this blue line. If it goes below this blue line, it turns red. Okay, and look at this sharp turn down right here. So really got to watch this if you want to know which way the market's going to go. All right, but that's kind of why I like to do golden geckos, and that's also the reason why Karen, golden geckos, we're selling premium 1 standard deviation away. Karen, the super trader, she sells premium 1.5 to 2 standard deviations away. So she has a lot more protection, but then again, she also has a lot more money. So I'm back onto the year-to-date daily chart. I got a couple minutes left. So again, I want to reiterate, when you sell when IV rank is at 100%, okay, it's almost a no-brainer. You're gonna have you're gonna have IV rank collapse, which is where volatility collapse, which is where you make your money. Because when you sell premium when IV rank is high and then IV rank volatility comes in like this, you're gonna make money even if you're wrong on directions for the most part. So that's why I love selling golden geckos when IV rank is high. Now, the trick here too is when IV rank breaks 50, which is this green line right here, you can start selling. But then remember now, it could keep on going. It could keep going higher. Okay, and that means your position is going to be tested and your P&L is going to go negative as this goes higher. So this is where you might have to roll or hang in there. Okay, because it went from here 50 on January 24th, then it got to 100. Okay, on February 3rd. So it didn't take that long. And then from there, look how long it took to get dropped back down. Not that long. Okay, so long as you have duration on your side, you'll be okay. So look, it didn't get, I don't